Wheat is leading the way higher today in the grain market. Hi, everyone. John Jenkinson. Let's find out where we stand right now. And first of all, we'll stop in the corn market, as we always do. We're 4 cents higher for May at $3.93.5. The high of that contract is $3.95 3/4. So we're still about a couple of pennies and a quarter away from all of that. December right now is 4.16 3/4. That is up 2 1/4 cents. Soybean market is higher early on, but then switched here over the last 15 minutes, with May now down 1 3/4 at 10.43 1/4. November is up a quarter at 10.47 1/4. But the wheat market still headed higher here with double-digit gains. May Chicago wheat up 13.5 at 5.09. July new crop wheat is at 5.09 3/4, and that's up 11 1/4 cents. Kansas City wheat market for May up 5 3/4 at 5.18. The high of that contract is 5.23.5. July Kansas City wheat is at 5.37.5, and that is up a whole 7 cents. Then May Minneapolis wheat up 13 3/4. We've seen a little bit of a pullback here over the last 15 minutes as well. 6.20 is where we're trading at right now, a penny and a quarter underneath the high. July Minneapolis wheat up 9 3/4, 6.17 3/4. May cotton is down 70 at 84.63. December cotton is down 55 at 78.72. Let's go to the edge of the trading floor, and joining us here is Scott Gecas. He is with Longleaf Trading. And first of all, a little bit of weakness now starting to sift into this soybean market, Scott.
Yeah, and that's really surprising. I mean, everything, all the outside factors with everything pretty much across the board is very bullish for corn, or soybeans, I'm sorry. But you've seen soybeans trade all the way up to 67.50 or so, earlier on. And then we had this dramatic pullback. Not really sure why this dramatic pullback is there. You have a lot of outside factors, the crash in Argentina with their export port. That's going to be delayed between 8 to 10 months, 8 to 12 months or so. Also the fire at the crush plant. I mean, all of that is very bullish for soybeans. Now, that's going to spark a lot of demand from China. They need soybeans. It's not an if they want them. I mean, they need them. So, you're going to expect a little bit more stronger demand from China going in. That whole tariff thing, I think it's going to be outweighed by that Argentina news. So it's really surprising that we had such a dramatic pullback, but we're going to stay bullish above 1060. That 1060 is a very significant level.
I'm glad that you mentioned the Argentina issue. We sold 120,000 metric ton of soybeans to Argentina this morning. It was for the 2018-2019 marketing year, so that makes a couple of sales now that have been kind of pushed back here for that 2018-19 marketing year, the next year.
Yeah, and I would expect to see those sales coming in stronger and stronger as time goes on. Everyone's going to be focusing on that USDA projection report on May 10th. There's also that NAFTA report coming out. They're getting closer and closer to a deal with that. All those factors, I mean, those are very bullish for soybeans.
Wheat market's headed higher too. What are you hearing on the trade floor this morning?
Yeah, the wheat market it's a very odd dynamic. 37% of the winter wheat is poor versus very poor. So that's a significant number. Their focus is still going to be on weather going in. Also that Russian wheat production was dropped to 74 versus 85 versus last year. That's a pretty significant number too. That move on Friday was due to short covering. 10 or 520 in the wheat market is going to be a big significant level. It's a very resistant level. We're going to be keeping an eye on that.
All right. Scott Gecas here at the edge of the trading floor. Well, let's find out what's going on in the soybean meal market, because Scott talked a lot about soybeans and soybean meal. And today we've got the May soybean meal at this point in the time of the day up 60 cents at $3.93.80. And July is up $1.10 a ton at $3.96.50, closing in on that $400 mark. And that is the high of the contract, by the way, $403.60. All right, when we come back, Scott will join us on the other side of the break, and we'll talk more about the livestock trade, cattle and hogs. That's coming up next here on the Market Day Report. Scott Gecas is at the edge of the trading floor in Chicago here, and he joins us now to talk about this livestock market. We'll start in the cattle first. So what is the trade saying this morning that you're hearing about last week's cash cattle trade?
Yeah, that cash traded all the way up to 126 on Friday. That's very significant. You know, weather due across the board in the States here, it put the feedlots behind schedule by, a few weeks. That's definitely pushing, that market a little bit higher. We still have that gap to fill between 106 to 110. The cutoff values are still a little bit higher than normal. Slaughter rates were off about 1%, not too much, but we're going to stay bullish above 106.
And what about the feeder cattle market? Because that market was showing a little bit of signs of some strength earlier. Let's take a look at these numbers and get everybody up to date on the latest numbers. We'll start in the live cattle first, where April is now down 45 at 124 even. June down 70 at 106.30. That's that level that you mentioned there, Scott. August is at 105.42, down 56. Then on the feeder cattle side of the market, and this is also now quite a bit weaker, with May down 72 at 141.30. August feeder cattle down 120, 147.05. September feeders down 83 at 147.52. So when you look at the chart action of this feeder cattle market, are we bound here to go back and test some of these lower levels?
I think that's all going to be depending on how the weather is going to pan out for the next 5 to 10 day forecast. If we see the weather come in a little bit stronger with the moisture and such like that, I think it's going to have a negative effect. But all the eyes are going to be on the feeder market. For sure is going to be on the weather patterns coming in for the next 5 to 10 days. All
right. We've been talking a lot about how indifferent the hog market is from the cattle market when you look at the front month of the futures and then you see what's going on with the cash. And today we've got May hogs headed higher, up 17 at 66.27. June up 58 at 73.20. July up 16 at 76.38. So is that trying to give a lift to the cash hog market, you think?
Yeah, I think it is, but I think it's a lot to do with, the market just being oversold. Going into today, 6 out of the 7 last trading days, they were down. So I think it's just a little bit of, people taking a little bit of profits, increasing their little bit of long positions. Cutouts were still up a little bit. Slaughter was up about 3% versus last year. There's a rumor that a lot of the speculative funds are building a very heavy long position. So we're going to see how that's going to play out. But we need to hold at 172.5 level.
All right. Scott Gecas here with us. They're at the edge of the trading floor in Chicago. Scott, thank you very much. We appreciate it. I want to go back here and review a little bit on some of these other contracts on the lean hog futures, as they were headed just a little bit higher. We did have one contract that was still weaker. The August hogs down 24 at 76.38. But again, that front month up 17 at 66.27. We talked a lot about the cutouts as well. We'll start over here in the beef cutouts, and that's where we saw the choice jump 276 at midday here today, 224.50. The selects not quite up quite that much, up 88 cents at 205.20, but we did widen out the choice select spread. It's out to $19.30. 56 loads moved this morning. On the pork side of the cutouts here on this midday report, we had the carcasses up 13 cents at 68.74. The loins down 76 at 72.05. The hams at 52.35. They were down $1.18. And the belly market today, 86.70. Up $2.72 a hundredweight. And for the some of the other outside markets, the dollar, we checked that earlier. Let's recheck it now and find out here that June is up 170 points at 91.510. The September dollar index, however, is up 210 points at 91.100.